Hello, today is the 20th of October and we will relook at the Nifty. Now, this is the Nifty weekly chart. On this weekly chart, we have been trying to get the best wave count, and that best wave count has been very elusive. In such cases, it's always nice to step back and look at it as a whole. And as a whole, if you would like to comment or see, the Nifty has been going sideways for almost the last year and a half, right? Now, when you see this kind of a sideways movement, you always think, could this be some kind of a triangle? So let us keep that in mind. We'll come back to this after a few moments. Now, this is the daily chart. On the daily chart, this was a sharp rise which stopped exactly at this trend line. This was followed by a corrective decline. And then we were initially thinking that this is A of the decline, B was going to form, and C was going to come down. That did not happen. Therefore, it is entirely possible that this decline is completely done, looking at the subsequent price action. So, what are we looking at now? We are looking at this trend line again to provide some resistance that is at 11,777, right? So the first resistance we would probably see somewhere around 11,770 to 11,800. But then if you look at it in another way, we have a cup and handle formation which is coming forming right about now. So this coming week, if this cup and handle is broken to the upside, we are looking at much more bullish levels. Another uh, formation which we can observe is this. This is a inverted head and shoulder, and this neckline has already been broken in the last trading day on Friday. So the Nifty from all points of view is at very important levels where if it was to cross these levels and go above 11,800, we will see a brisk rise to new highs. So, any which way, a cup and handle, a head and shoulder, or even this A, B, or C at the minimum, we should see a level definitely above 11,700 to 11,800. And if that is crossed, then we should see a very fast and brisk rise to newer highs. So that brings us back to the big picture. What is happening? So the big picture, we will go back to the weekly chart and we will identify this as some sort of a running triangle. The giveaway to this structure is this three-wave rise. So if this is a three-wave rise, we can count this as A, B, C, D, and E. And therefore, this running triangle should be almost over. And if that is so, and that is supported by this bullish breakout, impulsive breakout, so that means that wave 5 has started from this pre-tax low. And if wave 5 has started at that pre-tax low, then we have 1 and 2 and 3 of 5 is now upon us. What is going to propel prices higher? We don't know. But we do know that any announcement could come here which will provide the impetus for wave 3 of 5 to take off. So we are very much awaiting. Let the Maharashtra elections pass and let us see if the government can come out with some kind of a Diwali bonanza or if there is something very positive in the world markets that would probably kick off this rise. Now, a sobering thought. Everything as up till now is a theory. This has to be proven by a breakout about this line, about this trend line, and so on. So this is not a trading recommendation. This is just basically a possible outcome of this formation. So keep that in mind, folks. The Nifty is at very, very interesting levels. What is even more interesting is the Bank Nifty. If Nifty was to break out, let us look at the Bank Nifty. Let's remove the old labels. And here you can see that the Bank Nifty is still quite a way away from these highs. The Nifty is almost at these highs, but the Bank Nifty has to catch up. So we would probably want to go long more on the Bank Nifty than on the Nifty if we are thinking in terms of a bullish breakout. You will get more bang for your buck, as well as your stop losses will be pretty much manageable and near. So that is about the markets right now, folks. The next week is looking like a very, very interesting week.